What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. And we're going to be breaking down our futures contract once again. We're going to be breaking down everything from the monthly, daily, or monthly, weekly into the daily. And then we'll briefly go over the 30-minute time frame, which is mostly what I trade off of. Took only a handful of trades today, nothing too crazy, as it's hard for me to want to buy in a market that is going down in the bigger picture. So let's go ahead and get into it, and we'll go over everything as we can, or you know, English words. All right, so monthly, we were in a decent size monthly balance. We have been one time framing down now, technically setting lower highs and lower lows 3 months in a row now, but we've only been one time framing down 2 months in a row, as last month's range was the low, or not last month's, but August range. The low of that was the balance low. Last month we took it out, which started the one time framing down, and we've been one time framing down. We got back into this rather large monthly balance that I had marked out, and then we did have a bit of a smaller balance range, which was, you know, roughly in this range here. And so far we're pulling back into that area. We continue to one time frame down on the monthly now, targeting June's low, right? If you are short on the monthly time frame, you got targets, and one of your targets may be the monthly low of June, which is 41.78, and that's kind of where change took place. That's where we got that big pop after, you know, having some pretty tight consolidation, some tight ranges for as far as monthly goes. This was a 126. This one was a 176. And then we got that big pop in expansion and volatility and range for the monthly. And, you know, it came up. And right now we're kind of seeing that on the downside now towards June's low. Now we've pulled into this area I've had highlighted for quite some time. This is kind of my go, no-go zone for shorts. It's kind of tough. Especially if I were to be swinging shorts, I wouldn't want to be swinging into this range, just because I feel like, you know, if I was a large player and I'm looking to swing, I would probably begin to look at maybe starting a position in this area, but I'd be very cautious, right? But this would be an area that I'd be, you know, very interested to see if we do hold. Now, obviously, if we get below June's low of 41.78, then you begin to target May's low from the monthly standpoint of 40.62, and basically just back testing the 4,000 level. And that's not what buyers want to see. Buyers want to see continuation to the upside, but we're not getting that as of right now, especially on the larger time frame. Now we'll go ahead and look at the weekly time frame, and you can see how the weekly has begun to pull back into that range from. You know, we're looking at the monthly balance. You can see how we broke out of that monthly balance, had some issues, and then kind of continued to the downside. Last week, we closed with an outside week down. And then to this week, so far, we're getting a continuation. This was the weekly balance, right? Our weekly balance range was 44.9, or what was it? 44.19. 25 or 44.19 exactly was the weekly high, and then our weekly balance low was 42.51.25. The previous balance low was 44.23.25, and last week we pushed right up to it to the tick and then rejected out of that upper balance pretty heavily, resulting in the outside week down. And so far this week we're getting some type of continuation. Now today was a bit of a short covering rally as we pushed into this area where change took place. You can see that massive buy tail on the weekly time frame, ranging from that 42.20 area basically down to 41.74, right? So that range is like that no-go zone that I was talking about on a short, right? It's kind of tough for me to want to short here, but also tough for me to want to long it as well, because everything as far as our monthly, weekly, daily, and even in the shorter time frames have been telling us the short is the play on pushes up. So far, a continuation to the downside. Like I said, your target from a monthly standpoint will be that low of 41.74. So continue to look for some downside pressure if this market really wants to get going. And how we stop that is by stopping it on the shorter time frames. And we'll look at that here on the daily. So if buyers want to change things and they want to start to defend, we need to change stuff on the lower time frames, such as the daily and our 30-minute time frame. Today we kind of began to witness a little bit of that as we ended up with a P shape. I'll show you what that looks like here in a second. P shape on the 30-minute time frame, which is basic for short covering rally. We had a nice buy tail, attempted to go double distribution up, etc. And I'll explain that here shortly. But from a daily standpoint, you can see here we now officially filled that gap back from early June. We had that gap early June from June 1st to June 2nd. We had that gap up. We finally officially filled that gap on the downside. Now, your next downside target as far as gaps go, the only other gap that we do have is this gap up from May 4th to May 5th, right? So we have that gap up there. That gap gets filled, or it starts, excuse me. That gap gets starts at 41.13 or 41.11.50, excuse me, and that gets filled at 40.98.25. So that would mean we get below June's low to get to that gap. Now, I'm not expecting that right away, but this market could get that with ease if they really wanted to. Now, as far as our daily balance goes, we broke out of our daily balance quite a while ago. We've been one time framing now 1, 2, 3, 4 days in a row, closed below the 50 and the 20-day moving average for several days now. Now we've closed below the 200 2 days in a row. Now, 1, 2, 3 days even don't make a market, right? We need to give it some more time before we can determine whether or not we're finding acceptance of price below the 200-day moving average. So far today, we pushed above that 200-day moving average and got rejected initially. So far, we did not find acceptance back above it, and that has a lot to do with what's on our 30-minute time frame. Which, we were in the lower distribution for majority of the day. We pushed up and then could not get into the upper distribution, which was basically the upper portion of this range here, which kind of falls in line with where the 200-day moving average was. The 200-day moving average for ES is sitting at 42.66. And today we have a wide point of control right around that area. So a lot of volume was being put in right around that area. All right. So a lot of volume being put in around that area. Your target on the downside as far as daily lows go, besides today's daily low, would be this daily low, 41.78, back from June 1st. That would be the next daily low. So that is a target. I'm going to mark that on our daily chart here. 41.78, so I don't forget about it. 41.78 is your next daily target on the downside. 41.78, 6/1/23 daily or low day. So that's going to be your next daily target there. 41.78. That's the next daily target. Volume not as great as it has been. Kind of died down a little bit, but basically all because today was nothing more than short covering. And we'll go ahead and look at that on our shorter time frame here on the 30-minute. So if I were to get rid of all of these destinations and go straight to default, kind of squeeze it up like that, what does this shape look like? It kind of looks like a P, right? It looks like a P shape. P for short covering, right? We have a buy tail, and then we have a bit of a rally, and then a round, rounds out, resulting in a bit of a P shape. Now, initially, we did have a double distribution day. We attempted to go triple distribution, but it did not last very long. You can see right here where we initially had a set of single prints. I'll highlight real quick right where that was. It got filled late in the day. But right here, each time we came down into that set of single prints was a buy, basically around the 42.50 level. And we pushed up. And, each time you push down into it, you got a little bit of a relief rally for a couple points. It was worth a long because early in the day, you had shorts covering, right? That's what pushed this market up. We did open up initially with a gap below the previous day's low, right? We pushed down pretty good, 42.13, and then rallied aggressively to fill the gap and then get back into the previous day's range. Now, what sellers didn't want to see, they didn't want to see us get back above the price probe and then find acceptance within the lower distribution, right? Remember the two distributions from Friday. This that I'm highlighting is the upper distribution, that 43.02 to 42.87 range. And then the lower distribution was 42.84 down to the day's low of 42.4725. That was the lower distribution, right? So you had the upper and then you had the lower distribution here. Okay. So after we got into the day's range, we attempted to find some sort of acceptance and then eventually went trend to the upside, creating a wide point of control right around 42.62, which was near and just below that 200-day moving average. And then we finally kind of rolled over as short covering began to cease. And we closed near the lows today, but just above where our buy tail is. So tomorrow we look to see if we open up above basically 42.30. If we open above 42.30, you have an upside destination to 42.6250, which is the 9Y point of control from today. Keep in mind the 200-day moving average is hovering right around that area. And then you would target today's high of 42.8075. And then if we got today's high, we would put ourselves initially into a 3-day balance, right? And then we would begin to attempt to find some sort of acceptance above the 200-day moving average potentially, right? You find some balance, you get acceptance above the 200-day moving average, and then you begin to take back some of these other destinations on the upside, right? You put yourself into a balance and your 3 or 4 day initial, and then you look to move up higher. That's what buyers want to see. Now, sellers, they don't want to see acceptance back above basically 42.80. You get above 42.80, the short game's over. You get above 42.80, the short game's over for now. You look to see how much more this market can push up because short covering will be rather aggressive because, we've got 1, 2, 3, 4 days worth of short positions that are going to begin covering if they haven't already. So keep that in mind. Now, as far as the downside, we have today's low of 42.1325. Okay. Basically, you get below 42.30, you're going to go target 42.1325. All right. And then below that 41.78 daily low back from June 1st. Now, I don't think this chart will let me go back that far on my 30-minute. No, it will not. So you can see all the upside destinations we have here, but I do not have any downside. That's due to the rollover of the new contract. Anyway, so hopefully that makes sense. Buyers want to hold above 42.30, get above 42.80, stop the one-time framing down on the daily, begin to squeeze shorts out, establishing long positions and pushing this up even further. Sellers don't want to get above 42.80. Basically, we want to stay below 42.60. So 42.60 to 42.80 would be your sell zone. Above that, you'd be out. And then you'd want to see this market roll over, take out the day's low, and go and target that June's low like I was discussing. So those are the two scenarios going forward, and that's what I'm going to be looking for in this market right now. So with all that being said, ladies and gentlemen, I hope you all have a wonderful day. We'll catch you guys in the next one. See you.